So here's kind of the Buckhead retail market, just like everything else. This one's interesting because everything's moving away from any kind of, other than the streets of Buckhead. I don't know of any other big retail development because everybody's so focused in right now on multifamily. So the new retail space, the demand for that's kind of getting met in small little chunks in the bottom of these buildings and these mixed-use buildings. So it's, you know, it's the ones that we were talking about with 10,000 square feet of ground level retail, the Walgreens on the ground level of a medical building. So anything that's got good street exposure, they're going to throw retail on the bottom and then go up residential on top of it. So I didn't see anything that indicated really, really large-scale retail development, obviously, because most of it's already here. But anyway, so here's the vacancy rate is dramatically low, 3.3% right now. This is just, again, the Buckhead retail market. Supply has remained absolutely constant. Absorption, obviously, in 2011 was really the only negative net absorption, and that is, I've never seen another market in Atlanta even close to that. Usually it's negative till about 2013. So that you know, there was still positive absorption in 2010, and the Buckhead retail market is pretty astonishing to me. There's just no construction going on at all. Very few deliveries. This 176, that would be the streets of Buckhead or Buckhead Atlanta, being delivered in September of 2014. This is just the map of where it is. All the maps look exactly the same. I mean, they're all in the same areas. Yep. Okay. So I got the 1 and 5 year stats. Nothing's changed, building-wise. 561. Am I reading that right? Yeah. 561, 561. Rents are going up dramatically. Vacancy rate way down. Sales prices are inching up a little bit. Volumes come way up, and cap rates are again being compressed. I mean, Buckhead is just perceived as a really safe investment. So that's why it's attracting so much foreign money, out-of-state money. So I think that's why we continue to see, and you know, in spite of the Fed raising rates, we continue to see cap rates being compressed. There's just so much money chasing deals. I mean, I think that's a lot of what all the construction is right now too. Is there's been so much money sitting on the sidelines for such a long period of time. And I mean, ultimately, developers, what they do is just develop, they build. And so I think they've sat on the sidelines long enough, and it's just kind of the minute somebody finally took the leap of faith and did it, they started getting back into it. It was, you know, it was off to the races. So this is just, again, the graph of it. It tells the same story. We just saw a number format. Vacancy rates are just trending down. Looks like it flattened out a little bit in 15, but I mean, I don't know how much further they can come down. Asking rents are going up. And again, I would be surprised if any significant new retail development outside of mixed-use buildings were to come online or to be planned. I don't know where they'd put it, first and foremost. I guess they're going to do some phase 2 of the streets of Buckhead, but everything in that, or Buckhead Atlanta, I keep calling it streets of Buckhead, but everything in that is a mixed use, just on a lower, you know, 3 stories or less, typical plan. Residential hotel, I know they've still talked about over there. You can't build 1 story in Buckhead, and you just can't. It's just not feasible. And all the people that are sitting in low-rise stuff right now, I mean, eventually I believe the taxes are going to start to price those people out too. And anybody that's got, you know, 1 or 2 story developments, older offices, I mean, I would highly recommend starting to look for assemblage partners and get it to a place where, you know, you can sell out to these developers, because it's just going to be taxes. I mean, obviously the city's going to see all this, and they're going to get their share. Hi, this is Casey Lyon with Crossroads Appraisal Group, and I just wanted to say thank you for taking time out of your day to watch my video. If I can ever be of service or help you out with any information or appraisal related questions, feel free to give me a call at 404-724-5110, or I can be reached through my website at crossroadsappraisalgroup.com. Thanks so much, and I look forward to hearing from you in the future.